Hi, fellow investors and traders. This is Joe Gruender from InvestorsHelp.net. A few days ago, in fact, was the April the 8th, I put up a video at InvestorsHelp.net based on some research work done by one of my partners, Ron Nelson. Ron reviews the weekly stocks on the weekend, and he found this stock and suggested it might be a good candidate for my consideration. The symbol is LGND. This is what I showed you in a video that I put up on the 8th of April, and the video is available on InvestorsHelp.net blog page, so you can see what happened in video 1. At that time we had a buy point of 79.71 and a target of approximately 25%, which would take it up to 99.63 or so. So this is the trigger that came to my attention from my partner Ron, and based on that I went ahead and put a video together on the 8th, and you can see that this video here is part 2, since we now have a breakout from an area where price formed a base. So I'll get into that in a few minutes. So let's go to the current chart and see what's going on. Okay, here we are on the Thinkorswim trading platform. The symbol is LGND, and this is a weekly chart. On the 8th of April, we took a look at this chart, and I identified two areas where price was forming a base. Here was the first one back in the January to February time frame. Was the first base, and then there was a subsequent base that was being formed, and this is why and when it was brought to my attention by Ron. He suggests that we take a look at this because this is a nice 4-week base. Be nice if it was longer, but at the time that's what we had. This is a very strong stock that had continued to move up. So from the weekly chart we went to the daily chart. Let's take a look at what happened. Okay, on the daily chart, let's zero in a little so we can see even better. Here's the first area of base building, and then price shot up, formed a second base. So on the 8th, the 7th, price remained within the base. As you can see, we got a higher high and a higher low from the previous day, but it had not yet broken out from this base. Then on April the 8th, around 8 in the morning, I think it was California time, that I saw this was breaking out from a base, and I thought, well, this is a good thing to consider, as a good time to consider maybe putting out a video and alert our free subscribers of what's going on here. And that's exactly what I did. I want to show you something here. Here is a full stochastic, and you can see not so much here on the daily, but let's go back. I forgot to show you this when we were on the weekly. Look at, here's your full stochastic. We're in a oversold condition, and look what happened here when your green, your full stoch, crossed the moving average. You would have gotten in right here. How's that for a wonderful time to get into a position? Now we are oversold or overbought. However, being in an overbought condition can last for quite a period of time, but it's just an alert for us to know that we are currently overbought. So let's go back to the daily, and to here, to me, the Stoch doesn't tell you a whole lot, but we could zero in if you want to look at it. So here's all this is overbought, overbought, and once again we're overbought. So that's a heads up to let you know, either tighten your stops or sell your position. When you see a reversal like this where the full Stoch crosses its average going down. Okay, let's go zero in onto the hourly chart. That's the one I really like to trade off, is the hourly chart. And as you see, we're still overbought here. We're at an extreme, so we can expect a pullback. Don't know how far, but let's see if we can estimate what the pullback would be. Here on the 8th of April is when I prepared the video suggesting you want to take a look at this. One of my favorite positions is you don't buy on the breakout. Let price pull back to the breakout point. Here, Ron had identified in his spreadsheet 79.71 is the breakout point. So if you had bought there, or if you had waited to test the breakout point and then bought, you would have made, oops, excuse me here, I don't want to put that on yet. Let's go down here to the trend line and look at some percentages. Okay, from this point where it retested, or at the breakout point, either one, it doesn't matter, to where the high was earlier today at 88.82 roughly, that's 12 days, you're up 11% in 12 days. So that's almost 1%, a consistent 1% per day, which is pretty good. $8.89 are $875 or so. Let's see at the close. $825 since entry. If you had bought 100 shares, or if you had bought 1,000 shares, you're up $8,000. So, which is pretty good to me. Okay, so now let's put on a Fibonacci retracement and see what information that can tell us from here. So we go down, we switch to a Fibonacci retracement. We draw from the breakout point, which is roughly here. It would be either here or here if you waited for the bounce. And we put that up here to the top. Okay, so let's zero in and see what we have here. Okay, price could retrace usually down to around the 50%, retracement area. In fact, it could come all the way down here to the 83.14 area. But you would think maybe 84, 84.5 would be a reasonable retracement. Now, there's another thing in addition to Fibonacci retracement we can look at is the moving averages. This is a 20-period moving average. Here, the black line is a 50-period moving average. The blue is a 100, and the green is a 200-period exponential moving average. The one that is watched most closely is the 50%, is this black line. As you can see, when price retraced down to the 50% yesterday, it bounced off of that and continued up and then went up today. So you could get a retracement back down here to roughly 86, or even down here to 38. And the strongest point is the 50% retracement. So for those traders and investors who are more conservative and like to take the cash off the table once they have a nice 10 or so % profit, that's the time to do it. Or another thing a person could do, if you're willing to see if the price will come back and retrace back down here to one of the moving averages, or roughly $85, and then see if it breaks that or holds support. it could retrace down to 85, and once again the 50 period exponential moving average would be there in that neighborhood. So somewhere between 85, 50, 86 might be a possible retracement area. But, that's up to you. So good luck to you. I hope you gotten into the trade. However, that's your decision. We only provide information, education, and some research for your use. The actual decision to get into the trade is based upon your particular situation, both financial and how much risk you're willing to take. So I hope you enjoyed this video. This is part 2 of LGND, and let's see what happens next. You take care. Joe Gruender, InvestorsHelp.net. So long.